Welcome to a short tutorial on how to properly use a trade plan. Welcome back fam to another video in the new series we have just started called the Trading Guide. The purpose of this series is to give you a couple of short tutorials that will explain really important topics in the trading world and to give you advanced tips and tricks that will get your trading skill to the next level. Today we will be talking about what a trade plan exactly is, why it is so important to use a trade plan in combination with proper risk management, and how you can use this fully automated trade plan to help you achieve consistency and success in trading. Are you ready? Let's kick this off. You will be able to find this fully automated trade plan totally for free in the description down below. After you click on the link, you will arrive at this page you see right here. To be able to use it for yourself, you will have to download it. This can be done by going and selecting the download icon over here in the right upper corner. Now it has been downloaded, let's open it and check it out. On the first page, you will find a fully automated trade plan. If you get this notification, make sure you just select this and then you can start this properly off. On the first page, you will find a fully automated trade plan. But what is a trade plan actually? Let's cover that first. A trade plan is a guide that helps you to plan out your goals when it comes to trading. As they say, if you fail to plan, you plan to fail. This is applicable to any aspect of life and for sure in the trading world. Now, a trade plan doesn't only have the purpose of setting goals, it also has the purpose to show you and teach you how to apply the right risk management. As some of you might already know, it is key to apply the right risk management during trading. That means, like you can see over here, that you risk a maximum amount of percentage of your account every single trade you're gonna take. What I recommend personally is that you risk a maximum amount of 1% per trade. That means, as a general thumb rule, that you use a 0.01 lot size for every $100 in your account. This is not financial advice whatsoever. It is just my personal rule when it comes to risk management and something that I found personally works for me. Now, why is it important to limit the amount of risk you take? Well, this is the key to become consistently profitable because it is impossible to be 100% right every single time in the markets, and that's why it's important to plan out what will happen when you actually lose. So to summarize, the goal of a trade plan is to make a plan both for your wins and for your losses by planning out the goals you want to hit and combining it with the proper lot size depending on your risk management. Now, to use this trade plan and this whole document, you will notice that most fields are actually unclickable. This is to make it as easy as possible. To use it, you just fill in the correct numbers in the fields with a blue arrow next to it. Over here you will find a little bit of explanation what twin trading is, but I actually already made a separate tutorial about twin trading that is up on the channel, so if you want to learn more about that, go check it out. Let's use an example to fill in the trade plan. I'm gonna use $1,000 as an example. As I just said, I do advise you to leave that risk management on 1%. The pips per trade is actually the average amount of pips you're gonna take with a trade. What I advise to every single one of you is to trade with a trade strategy. A trade strategy is a certain approach when it comes to trading that has already proven to be successful. Now, depending on that strategy inside the markets, you're going to go for a certain amount of pips with every single trade. The strategy that I'm personally using is called ECC11. Now, if you want to learn more about that strategy, there's already a full tutorial up on the YouTube channel as well. With that strategy, the goal is actually to go for 10 pips per trade, as you can see over here. Then the last step you can choose is if you want to reward yourself with a certain percentage on every single trade, or if you actually just want to build your account fully. Imagine we want to reward ourselves with 50%. We filled this in. That means that if on our first trade we have a profit of 10 euros or $10, we will actually reward ourselves with $5. Now, if you want to properly build your account, I would advise to put this percentage lower or even just leave it at 0%. For this example, we will actually put it at 10%. Now, when you have filled in these 4 fields, you will see that you have a fully automated personal trade plan made and tailored to you. As you can see, it will tell you that at your first trade, your trade balance will actually be $1,000. And with that, the proper risk management to use would be lot size 0.10. That then means that we will have actually a profit of $10, and of that we will pay ourselves out a reward of $1 or €1, right? As you can see, the next time we will actually not have a balance of 1,000, but we will have a balance of $1,009. This $1,000 and this profit of $10 or euros minus the €1 we rewarded ourselves with. If we continue to do so and we actually take 13 trades, you will actually see that the lot size changes to 0.11 and still only risk 1%. If you have done a trade, you can actually select done over here and you will see that the trade will become green. This way, if we keep on going and we select a couple of trades, at the bottom right corner you will get a summary of your total profit and your total reward over here. If you take loss for some reason, you simply unselect the trades until the point your balance is back at the point that this is correct. Now, this trade plan will normally make your life that much easier and give you a guideline towards using the proper risk management and to plan out both your wins and your losses. Now, this trade plan you see right here is obviously a short-term plan since we just planned out 30 trades. Now, if you want a more long-term plan, you can go to the second page where you will be able to find a weekly goal plan. It is exactly the same way of working as the first trade plan, but then just to get a monthly overview. Let's fill this in the exact same way. So we fill in $1,000. We fill in a weekly percentage of 5%. That means that's 1% a day, which is actually a pretty good goal for a beginning trader. And we will reward ourselves with 20%. Now you will be able to see that the total profit and the total reward after 1 month, because this is the total of these 4 weeks, will be actually €215 and respectively €43 reward. The total profit of next month, as you can see, will actually be the profit of the first month and the profit of the second month combined. This way you can actually plan out your trading more long term, not only in a matter of weeks, but also in a matter of months. Now on the third page, you will find something really important besides just a trade plan, and that is a fully implemented trade log. Now what is a trade log? It is actually a logbook for your trades. Why would you do that? Why would you write down every trade you take? And this, people, is a major tip that I want to give to both beginning but also more advanced traders, is log your trades. That way you can learn not only from your losses but from your wins as well. Because by writing down all the details, if you have bought or sold, which pair you have taken a trade on, which strategy you are using, the entry point, the exit price, if you closed manually or if it actually hit your TP, the risk management you were using, the amount of pips you took, your profit. There is a section for comments as well where you can write down the most important stuff. By writing this all down, and this is just a basic version, I highly recommend using a little bit more advanced version where you can drop screenshots of your setups as well, so you can look back to it. But the main goal is that you log your trades. That way you will be able to track your progress, not only with numbers as we use in the trade plan, but also on different areas. What does your accuracy look like? What pairs do you mostly take losses on? Do you do more buys or do you do more sells? Do you use the proper risk management? How many pips do you go for on average? How are you actually feeling during your trades? And so on and so on. Using a trade log makes you able to track your progress and identify the points you have to work on much faster. Let's go to the last page. Now on the last page, there is a variable lot size calculator. The trade plan, as we have talked about, will give you a general thumb rule lot size, which is actually calculated by having a general stop loss of 10 pips. Now in a lot of examples in the market, your stop loss will be more than 10 pips. So to determine your proper lot size, we have this fully adjustable lot size calculator. A really important thing to talk about is this disclaimer over here. So every time you take a trade, you need to calculate your lot size depending on the risk you want to take, which we talked about is recommended as 1%, but also your lot size. Conservative traders have a 1% risk management, aggressive traders have a 5% risk management, which I do not advise to use. Most students are somewhere between and use a 2 to 3% risk management. For example, no matter what their stop loss is, they're only willing to risk 2 to 3% of their account. So let's use the exact same example as we did in the trade plan. So for the balance, we fill in $1,000. As you can see, we use the same risk management of 1%. And if we indeed fill in this stop loss of 10 pips, you will see that we have at the exact same calculated lot size as we had in the trade plan over here. Now, if our stop loss would actually be bigger, for example 20 pips instead of 10 pips, we can see that the lot size automatically changes. Now, I never advise changing your risk management, but I do highly advise to adjust your lot size depending on your stop loss you're using. So that way you're always, in any situation, only risking a maximum amount of 1% for every trade. Now, a little bit of a more advanced tip is if you really want to calculate your lot size 100% correctly, depending on the pair you're trading, you can use this link down below, since depending on the currency pairs you are actually trading, the exchange rate towards the currency on your balance will change the lot size a little bit. Using a trade plan and proper risk management is one of the most important lessons when it comes to trading that most people make mistakes against. And this is what will most surely help you go next level if you apply all the tips and tricks that have been given to you in this tutorial. If you had some value, make sure to subscribe and smash that like button, and I will see you all in the next video of the Ultimate Trading Guide. A la próxima. Ciao, ciao.